Good morning. Today is Thursday, December the 8th. The time right now is 15 minutes after past 11 in the morning. And overnight, we can see that Wall Street continue its pullback. This is the fourth trading day of pullback since the market registered a high for most recent high at 34,595. The market has basically been coming down since the non-farm payroll release last Friday. But we can see that the rate of descent has actually slowed down a little bit, especially during the second half of yesterday's trading in New York. We can see the market is stabilizing. Again, we have to consider the idea that maybe the week before Christmas, which is next week, could see some kind of buying interest coming forward. But then I have to say, if that is the case, then I still believe the upside potential is actually quite limited. The possibility of market challenging the April high at 35,492 is still there, but I think the market potential is not very, very good. In fact, the risk of a reversal is actually a lot greater, especially as you go into 2023. I think January will have a big movement. I'm expecting somewhere in the middle of the month of January, we can see a more exaggerated move. My bias is to the downside. So definitely at this current juncture, to continue to buy is to me a little bit more hairy. So I will probably watch this market as it reacts. If the market has one more rally, I will watch for selling signal to actually position for the next move in January of 2023. So downside, I think is fantastically large, okay, because we are seeing that numbers coming in is showing that the US odds of going to a recession is actually pretty high. And of course, we have major banks. CEO has been telling us the odds of US entering a recession is has increased dramatically. So if that been the case, there is no reason why equity market should be able to go up. So we are in the position for a recession play going to 2023. So based on this, we can see that the other index are also following through, like what we saw in the Dow Jones. Yesterday, we see the S&P 500 continue to pull back, but we can see on the second half of the New York trading session, it has actually stabilized. Either it is basing itself for another run higher or will continue to retrace lower. We have to watch as the market unfolds in the next 48 hours. Okay. Obviously, we can see that the Nasdaq 100 is not following through based on how would I say it? The market is definitely not as firm compared to the S&P 500 or the Dow Jones. So we can see that there's a pullback and it broke the short-term support line. Market is stabilizing just under the 11,500 points levels. So whether the market can actually rally one more time to challenge the most recent high at 12,115 remains to be seen, but we can definitely say that to take out the September high is a little bit remote at this moment in time, which is the level is at 12,740. So we can say that this level here is going to be a very high barrier to entry. So even if there's going to be a one more rally, this area at 12,740 is going to be a huge mountain to climb for the Nasdaq 100. Over in Asia, we can see that the Hang Seng, yesterday the market actually went up to a high of 19,737 before it comes back down very aggressively on the release of China import-export data, which is horrible. Okay, and that shows that within the Chinese economy, the contraction was actually more severe than market expected. So we can see the market went down towards the second half of trading in yesterday afternoon, went down by as much as 4.8%. So this is a very severe drop. Okay, so of course this morning there was a surprise rebound, but because of the damage done yesterday, I have shifted my bias to the downside, because to have a market that comes down so aggressively in one single day, just look back in more recent trading range, there is no movement like this over the last few months. Okay, this is a very large move on a relative basis. Okay, so that being the case, I am not looking to see any more new high beyond 19,737. So this could be the top for this run. Okay, don't be very careful. Over in the Shanghai Composite Index, we do not have such a severe reaction. Yes, the market come back down after after trading to 3,225, which is within my target range of 3,226 to 3,281, and the market came back down. But you can see that although it doesn't come down as aggressively, this is an outside day, what we call the what we call the bearish engulfing bar, which is potentially very bearish. So that being the case, I think the market may have already peaked. Okay, so yesterday's high 3,225 could be the peak for this one, and now we want to see if the market reacts aggressively to the downside. So this is something to watch out for those who are trading Chinese equities or even the Hang Seng index itself. So over in the Nikkei 225, you can see that the market continued to react to the downside, mimicking what we see on Wall Street, but the pullback is a little bit deeper than expected. So the market looks like it's going to hit for 27,300 points. So if this being the case, I think we probably will see further losses going forward. Over in the FX space, we can see that the dollar continues to chart higher. Yesterday we have sorry, not yesterday. Yesterday we have a high of 137.85. Okay, and then towards midnight itself, we can see market actually came back down and it has stabilized just under 137. So there's every likelihood that this market may actually continue to edge higher to the 140 yen level. So if this is the possibility, there is a little bit more upside to the dollar yen potential going forward. Over in sterling, because if the dollar continues to edge higher, then of course the other currencies will have to pull back. So we have seen that the sterling has actually peaked out on Monday at 132.44. Previously I was short this one near the very top, and but I bought back my position yesterday, and so today, no, not yesterday, the day before yesterday. So yesterday we have another run up, and I positioned myself to go back in again. Again, I managed to sell near the very top here. So we will see if the market will continue to edge lower, and if it breaks the near-term support line, I think the potential for the market to go all the way to 1.1780 remains a possibility. So this is quite a fairly large move. So I want to keep this position for as long as I can. Okay. Over in euro versus the dollar, the same thing happened. The market peaks at 105.95, and I also sold near the very top, but I bought back the day before yesterday, and then yesterday the market ran back up again. Again, I sold back near the very top here, 105.45 here, and I want to see. Hopefully the market can actually break the near-term support line, and if this has been the case, the potential for this now is at parity, just below parity. So we can see that if this is the case, from where I enter, there is a potential for 500 over pips potential here. So this is actually quite a great trade because the risk is actually very small. I put my stop just above 106.10. Okay, so hopefully I want to exchange this this space here for that limited risk that could possibly happen. So again, remains to be seen. Over in Australia, we can see Australia has hiked its interest rates by a quarter point, and we can see that the Aussie did not really go up very much. Yesterday, we can see the Aussie went up to 0.6742, and then it started to ease back this morning. And if this being the case, of course, we can see that their GDP has also shrunk. So that being the case, we can see that the Aussie downside remains a possibility. So what we can see is that maybe we can see an extended move to the downside, targeting maybe 0.6590, which is the somewhere near this low here, okay, which is the November 21st low. So this being the case, I think there's a possibility of a market going down to just below the 66 cents level. Over in the dollar CAC, the dollar CAC is a bit of a contradiction because yesterday the high was near 137, but you can see the market after that have a very sharp drop, followed by an equally sharp rebound. So it means that if the market continues to edge higher, the risk because of this very sharp pullback may cause sentiment to change a little bit. And of course, we all know that Canadian dollars is tied heavily to the prices of crude oil. So if the crude oil prices cannot bounce, there's very little chance for the dollar CAC to actually come back down. So that being the case, I still see a continued weakness in the crude oil prices. So that means that the upside is still possible, but it's getting very limited. So be very careful chasing the dollar CAC ever higher. Okay. So now we take a look at the crude oil itself. Crude oil yesterday went down to a low, which is about the lowest we have seen for this year, $71.75. So for our time being, there is no supporting news to support the price of crude oil, especially after this week we have the $60 per barrel cap imposed by the EU. So we can see that the market is reacting to the downside. But however, we have yet to see any concrete reaction from the Russian. The Russian is definitely going to fight back, but to date, I think the Russians are still mulling over how to respond to this artificial price cap. So if the Russians decide to come back and give us an alternative or to fight back, then we will be very interested to see what they are trying to do, because whatever they do is definitely going to see prices going to go up. So we want to see what kind of response the Russian is going to do in reaction to the price cap imposed on Russia crude oil export. Over in the precious metal market, we can see that the gold prices are actually recovered back to 1,790 last night. But you can see this move here is actually quite tentative. So if the dollar continues to go up, okay, crude oil, gold prices is hardly able to go up. So I think for the time being, if dollar goes up, we will have to prepare for the potential that the precious metal may actually pull back a little bit more. So if this is the case, upside potential for gold right now is actually quite limited. On the other hand, there is a risk that the market may actually come back to 1,745 to 1,725, okay, as low as 725. So if this is the case, maybe going into reposition long position at around 1,725 will be a lot more sensible than buying at its current level. Over in silver, we also see the same reaction. The risk of another pullback, a deeper pullback to $21.30 or even to as low as $20.60 remains a possibility. So like I say, if there's a pullback, this is a godsend because we need to go in to buy, especially buy silver. Silver is going to be very explosive going into the next year. In fact, even before we go into next year, I think November 27 is going to be a date in which we want to carve out in our calendar, because that's when the option and futures will expire simultaneously. Okay, so that will cause volatility to happen, and I think the volatility is to the upside. Okay, so I'm very, very bullish on silver, so watch out this space. Over in the cryptocurrency space, we can see that the crypto has actually more or less easing off. We can see that Bitcoin from 15,480 go up to 17,425 has already completed its 3-wave rebound and within my target range of 17,300 to 17,660. So now we can see market pullback. There's a possibility the Bitcoin prices may actually take out 15,000 and then maybe even hit to 12,000. So for the time being, I'm maintaining a somewhat bearish outlook for cryptocurrencies. So my view for Bitcoin, you already know. So what about Ethereum? Ethereum also have a 3-wave bounce, okay, from $1,075 to $1,308, and then it stabilized and been coming down. And yesterday, the day before yesterday, it took out a near-term support. So there is a risk that the market may actually continue to go lower, and to take out the year low at 1,073 remains a very high possibility here. Ripple, on the other hand, is still marking for time. There is no real movement. The market has been consolidating for quite some time now. The high is $41, 41 cents, and the low recently is 37 cents. So by and large, the market will probably grind on lower, maybe to as low as 36 cents to as low as 35 cents. So do watch out this space over here. Binance Coin, again, is also grinding lower and lower, but it doesn't have the kind of spike move that we see in either Bitcoin or Ethereum. So the high traded this one was $317.60. Current yesterday low was $281.40. There's a risk that the market will continue to grind lower to as low as $275.60 to $267.50. So watch out for this move. Again, this Binance Coin is on a relative basis very, very stable. So if you get a good price, maybe you can actually consider going long, but you have to watch, especially based on the current sentiment in the whole space that we see here. Dogecoins also broke a near-term support after going up to 11 cents. Market now is pulling back, now is below 10 cents. Again, don't know what to make out of this coin because it's a meme coin, very much dependent on what Elon Musk tweet on that day itself. So lately he has not tweeted anything on Dogecoins, so we do not know. So the market is just drifting. That's all I have for you for today. Maybe tomorrow I will give you a new update as to if there's going to be any big change going forward. Okay. Now remember, next week is going to be big. Next week we're going to have the GDP report and the CPI report. So keep an eye out for that. Okay. In the meantime, you have a good day, and I'll see you tomorrow morning. Bye bye.